Venmo emailed me and invited me to use their platform to trade cryptocurrencies such as Bitcoin. And this is the same thing you can do at PayPal and Webull, Coinbase, and Robinhood. The question is, should you and I invest in cryptocurrencies right now if we haven't already? Is it time to buy? And if we've already invested, should we double down and put more money in to cryptocurrencies? As you may know, cryptocurrencies at the time of this video have taken a steep dive over the last few weeks, and so lots of people have lost money. Is it low, and is it time to buy low so that we can sell high later? This is the question I want to talk about in this video with you today. Hi, my name is Steve Hunt. I am a certified public accountant and the consultant for prosperity and adventure. I'm the expert at helping people like you reach your dreams faster. I also own collegetaxrefunds.com, where we help recent college students and their families collect thousands of dollars from their old tax returns that they don't even realize they missed when they filed those returns. So if you have a college student in your family, please have them check out collegetaxrefunds.com to see if they miss money on their old tax returns, and we'll explain to them how they can get that money back. As I told you, I want to talk about cryptocurrencies and Bitcoin today and whether or not it's time to buy and invest because of the dive or the crash or the tumble that these currencies have taken over the last few weeks. So I want to point out that I thought about this topic because of the Venmo email that I got, and you may have gotten a similar email. Let's take a look. It says, crypto is now on Venmo. Your journey starts here. Welcome to the world of crypto. Explore right in the app and get started with as little as $1. So you can throw some money in and start buying crypto. The question is that a wise investment for you? And the answer is going to largely depend on your own personal risk tolerance, your own need for your diversity of your investments, and kind of your investment timeline and strategy. But I still want to discuss this with you so that you can create a wise strategy, and you should talk about these things with your certified public accountant or your investment advisor, or you can reach out to me at collegetaxrefunds.com/contacts, and we can chat about your own strategy. But let's talk about whether or not this is the right time to invest in cryptocurrency. And the answer is certainly not if you don't have any idea what cryptocurrency is, what Bitcoin is, what it is you're getting into, how it works, what blockchain technology is, and how that works, and where Bitcoin and other cryptocurrencies get their value from. If you don't understand what it is you're investing in, if you don't understand a company you're investing in for a stock, if you don't understand something that your brother or your sister or some relative or friend comes up to you and says, hey, we should invest in this thing, we should do this together, and you don't understand what's going on, it is not the right time to invest. Never invest in something you don't understand. So if you want to invest in cryptocurrencies, it's time to do all the research you can, educate yourself, watch YouTube videos about it, do research, and figure out and talk to your CPA and your financial advisor and understand it better. I'm going to say that a few times throughout this video. Also, it's not the right time if you don't really have the money to invest. You should never invest more than you can stomach losing. So if you want to invest $5,000, $10,000, or $100,000 in cryptocurrency, imagine what it might be like if you lost that money and you no longer had the $5,000, $10,000, or $100,000 in a week or a month or a year, and it was gone. Because that is a possibility, and you should only invest what you are comfortable losing when you're talking about something as volatile and risky as cryptocurrency. You should also be prepared to ride out the swings when you see it dip, to just hang on and ride through it until it goes up again. And let's talk about how volatile this stuff is. I mentioned in a video that I posted on May 26, 2021, which is the day that I'm recording this, but I'm posting this video on May 27th, 2021. So yesterday's video, I talked about what to do if you've lost money with cryptocurrency. Go ahead and watch that video if you haven't already. This is about how you can save on your taxes by harvesting your losses with cryptocurrency and using them to offset your gains with your portfolio. Check out that video. A year ago, Bitcoin was worth $9,000. A month ago, it was about $65,000. Last week, down to $30,000. Today, when I'm recording this, up to $38,000. Who knows what it is when I post this, and who knows what it is when you're watching it. But it seems like it's dropped almost 50%. It dropped more than 50% up until a week ago, and then it bounced back up again. Is this the right time to buy? And there are lots of sexy stories about investors who hit it big when they invest in a cryptocurrency or a stock that's trading for pennies, and they put thousands of dollars into it, and that thing just explodes, and it's worth thousands of dollars later, and so they made millions. And those kinds of stories, striking it rich, striking gold, those things make us all wonder whether we should get into the game. And make no mistake, it is largely a game of chance right now. It is a gamble at this point, kind of like a Wild West casino or something out in Vegas. There is no FDIC insurance to protect you with these investments. There's very little oversight from the government, the SEC, when it comes to cryptocurrencies right now. So really, it's like the Wild West. And when you're talking about striking it rich, those amazing, awesome, sexy stories, they only happen to a few people, and they happen because people get in at the very beginning. And so everybody's talking about cryptocurrency and Bitcoin right now all around the world. I had a friend once who said, if at a reunion my grandma is talking about Bitcoin or some investment, okay, and she doesn't know anything about investing or whatever, then I know it's already too late. And that's kind of what's happening right now. Everybody's talking about it. And this friend of mine said that, you know, if everybody's talking about it, then I've already missed the boat. And that may be true. But let's talk about what it is you're investing in when you invest in cryptocurrencies and what it's not, okay? There is no underlying asset when you invest in a cryptocurrency like there is when you invest in a stock. The Bitcoin and other currencies are valued as whatever people think the value is. It's not based on the assets of some company or the future profits or growth potential of that company. For example, when you go out and buy a share of, say, Apple stock or Tesla stock or Microsoft, Walmart, or any other big company that you can think of, you now own a share, a piece of that company. And that means you own a piece or a percentage, however small it may be, of all of their assets, their buildings, their equipment, their vehicles, their inventory and the products that they make. You own a portion of their future profits, and you expect that whenever they sell any of that stuff, whenever they bring in profits, they're going to distribute out to you some little piece of that future profit as a dividend. None of that exists when you invest in cryptocurrency. There's no underlying assets, no inventory, no profit potential. Okay, and so you need to be aware of that it is not the same as investing in a stock. When stocks drop, when a company makes some very bad decision, when the economy collapses and now the company can no longer make the profit that it once did and people want to sell off that stock, the stock will typically not drop all the way to zero because there's always some kind of intrinsic value in the company. They still own buildings and assets and equipment, and they still need to sell, or they still could, sell those things off and distribute out a portion to you. So as long as they're not completely bankrupt and whatever, then there's still some value left. That is not the case with cryptocurrency. It's entirely decided just based on what people think it's worth. And you might say, well, what's the difference between that and any other currency? Because aren't all the other currencies also just based on whatever people think they're worth? Don't we simply all agree that the dollar is worth something? Isn't it just a piece of paper and it's not actually worth anything? That paper is just paper, and aren't coins just little pieces of metal? And so how is cryptocurrency any different? We just all simply agree that it's worth something. Well, I am going to tell you that it is a little bit different because dollars and other currencies are backed by the governments that print them, the faith and credit of those governments, if you will. But not only that, but when they print that money, they don't just toss it out into the country and hand it to people. They actually use it to buy products and services for the people, for the government. They pay out money as a government to build roads, to build buildings, to build, spaceships, rocket ships, whatever else. And the point is that as they are purchasing those products and services, they are creating value. And so the money, the currency, is then essentially backed by the gross national product of the country that prints the money. And it's tied to that value. And so as the country continues to produce more and more products and services, that country becomes wealthier, and that's represented by the additional currency that's getting printed. So the currency is backed by something. Meanwhile, Bitcoin could be backed by some products or services if that's how it gets distributed, if it's actually being traded in that way. But if it's just being traded back and forth between buyers and sellers, and the entire value of Bitcoin is being determined by what buyers will pay for it and what sellers want to get out of it, at that point, you're talking about essentially something that isn't backed by products or services. It is just a bubble. It's just whatever people are saying it's worth, and they're hoping that after they buy it, it's going to go up in value. And that is essentially a bubble, which is what Robert Johnson, a finance professor at Creighton University, says about Bitcoin. And I want to show you his picture here at the Creighton University website so that you know who I'm talking about. He has talked to CNBC, I think, US News, and he's been quoted on a Reddit thread. And so I'm going to be quoting a little bit from some of what Dr. Johnson, who is a Federal Reserve monetary policy expert, an expert in investments and portfolio management and financial planning. And I'm going to be talking about what he said and what this Reddit thread said about all this stuff. So one of the things that he says is that unlike a stock or a bond, cryptocurrency promises no cash flows to the holder. And he said, this is the biggest bubble I've ever witnessed. It's a very good vehicle for someone who is truly a speculator, either a bull or a bear. He says, I have no idea when the bubble is going to pop and how far Bitcoin will rise before the bubble pops, but he says he's convinced it will. As with any market, the future of cryptocurrency is not guaranteed. He says, I believe cryptocurrencies will implode and they will no longer exist in any meaningful sense in a few years, and the entire cryptocurrency market is a bubble. That is his opinion. It may not be yours. That's fine. We'll come back to what the other alternatives are in a bit here. Dr. Johnson thinks the cryptocurrency market is driven by what's called the greater fool theory, as investors simply rely on new buyers to bid up the price. And so they're trying to talk other people in. Get in. And as everybody gets in, then the elevator rises and the money floats up. But of course, if you jump out having, made a killing, having made a lot of money, then the last people who get in, once it's pumped itself all the way up to the top, it comes crashing down, and all those people, of course, lose all of their investments. And Dr. Johnson says that, the discussion on this Reddit thread says that even if cryptocurrency markets don't fail like he predicts, there still remains the question of which digital currencies will survive, because they're not all going to survive. With thousands of currencies in the market and new offerings emerging, some of them are going to disappear. And investors who want to speculate in this market should definitely, it says, first of all, probably stick with the most well-known names, such as Bitcoin and Litecoin and stuff, and also definitely learn about the market for each of these cryptocurrencies before you invest. And I've already said that once. I'm going to say it again. You need to know what you're investing in, and so study it out, watch the YouTube videos, read things up, and figure out whether or not this is something you want to invest in. So, if cryptocurrency is simply valued at whatever the market will value it, and it is not being traded in exchange for products or goods or services, and it's not being backed by the assets of some company, it's probably definitely very speculative and something that you should only invest in if you can stand to lose some money, and if you understand what blockchain technology is and what Bitcoin and these other cryptocurrencies do and where they get their value from. If you believe that Bitcoin and other cryptocurrencies are the wave of the future and that we are all going to transfer away from regular currencies into these kinds of digital currencies in the future, that would be a good reason to invest in these currencies. If you don't think we're going to make that kind of a switch, then that's one other reason to not invest. One thing that is very risky about these cryptocurrencies is that a social media post or a public comment can totally tank your investment. For example, just hours after Elon Musk made a joke on Saturday Night Live about Dogecoin, saying to the people on that, that comedy show that Dogecoin is essentially just a hustle, just a bubble, basically, the price of Dogecoin dropped 40%. The same thing has happened over the last few weeks to Bitcoin and other cryptocurrencies as the China Banking Association told their banks, member banks, about the risks associated with digital currencies. As Elon Musk said that Tesla would no longer accept Bitcoin in payment for Tesla cars. As the CEO of HSBC, which is Europe's largest bank, said that that bank will not be launching a cryptocurrency trading desk or offering the digital coins as an investment to customers because the bank believes that they're just too volatile and they lack transparency. And so you can see that as CEOs of these companies and banks make comments and say that these cryptocurrencies are volatile and that they're a hustle or whatever, the cryptocurrencies swing wildly because they're not based on anything, and so it's very risky. Now, as noted by a CNBC article just a couple days ago, which I want to show you now, here is the URL at the top. You can go read this article for yourself. I'll also post it. This article says, what if you still want to get involved in cryptocurrency without holding the actual currency yourself, which is the most risky way? You want something that's a little less risky, and so it gives you some idea. So I want to cover that ground now. So I have been playing the devil's advocate here, trying to say that be aware just how risky this is. Now that we've seen it drop, you know that might happen again. And it is possible for a currency like this for people to just simply decide, all right, that's it, it's worthless, and it can go all the way to zero. So you can lose everything. So the question, though, is if you want to invest right now when cryptocurrencies have dropped and you still believe they're going to go up and you think they're the wave of the future, then what is some way that you can invest without having the wide swings of the market and taking on all of that risk? One option for indirect investment is to invest in companies that hold Bitcoin and cryptocurrency, so that when that Bitcoin and cryptocurrency goes up and the value of those companies' assets go up, that your investment in that company will go up too. You can also invest in companies that accept Bitcoin and cryptocurrencies as payment, or that allow users to trade Bitcoin and cryptocurrencies on their platforms, or that use blockchain technology in their business or service, or that build, for example, the computers, the graphical processing units or GPUs that are necessary to calculate and mine cryptocurrency. So, for example, Tesla, which is also a volatile stock in itself, but that company owns quite a bit of Bitcoin, and so by investing in Tesla, you're also indirectly investing in Bitcoin. And then there's companies like Square and PayPal. Like we've already said, these companies allow you to trade cryptocurrencies, Venmo now. And then there's other companies like Microsoft, IBM, Google, Amazon that are all related to and own cryptocurrencies, and so investing in them also allows you to indirectly get in on the cryptocurrency craze. If you want to invest in Overstock, Riot Blockchain, Galaxy Digital, if you go ahead and Google what companies are invested in Bitcoin, what companies are connected to cryptocurrency, you'll get a lot of good suggestions. And then you can do research on those stocks, and if you understand their company and their model, it can be a safer investment for you. And even if the cryptocurrency tanks a little bit, those companies' values will only drop a little, not as much. And so that's how you can avoid some of the risk. Stock is typically easier to trade in a regular brokerage account or in an investment or retirement account. And so if you don't want to open up one of these trading accounts on some of the platforms I mentioned earlier to trade cryptocurrency, that's one reason why you might want to invest in some of these stocks. Also, if you lose your password for your brokerage account or investment account, you can simply reach out and ask them to reset your password or go through the whole process of acquiring your password again, which is not true with the key to your Bitcoin wallet, your password there. If you've got several coins that are worth thousands and thousands of dollars and you lose that key or that password, those coins are gone forever. Another way that you can get involved in indirectly trading cryptocurrency is to trade a trust account or fund that is involved in investing in Bitcoin or cryptocurrencies. For example, Grayscale Bitcoin Trust or Osprey Bitcoin Trust are two trusts that you can invest in and have other people manage your money. So again, you are buying the trusts in your normal brokerage account, and then those trusts are investing in the cryptocurrency so that you don't have to directly. And this allows your portfolio to go up when cryptocurrencies go up. But realize that because other people are trading for you, they will take a cut of your earnings or even take a cut of your portfolio when Bitcoin goes down. And so there are fees associated with this. You should understand those fees and make sure that you are using trusts and other mutual funds that have appropriate fees so that the fees don't eat up all of your earnings. Once again, I'm going to say this. Learn as much as possible about whatever it is you're investing in, whether you're investing in stocks or commodities, or in this case, cryptocurrency or other currencies, or if you're investing in trusts and mutual funds. Learn about their fees and do your research and invest only in the things that you fully understand, and only invest as much as you are comfortable losing. Yes, this is potentially a good time to be buying cryptocurrencies because of the 50% or so drop over the last few weeks. It could drop further. You might lose money. Be aware of that. But also, because it's low, if you understand cryptocurrency, if you're prepared to lose, if you're prepared to hold on through the tough times, this might be a good time to buy. But again, buy and hold for the long term. Don't buy today and watch it drop a couple thousand tomorrow and get out, because then all you've done is lost money and you won't be there to ride it back up. If you believe in it, then it's going to go up, okay? Meaning simply that that's what you bought it for, was because you have a belief that it's going to go up. And if you see it go down, hang on to that belief. Avoid day trading. I'm going to share a little bit of a story here. I had someone come to me who invested in Tesla all last year, 2020. The beginning of the year, they had $200,000 worth of Tesla stock. If they had simply held on to that stock all year long, riding it through the ups and the downs, it would have been worth $1.7 million at the end of 2020. However, this person bought and sold Tesla. When it would drop, they would get a little scared sometimes and sell, and then they might buy it back because they'd say, no, I want to hang on, I think it's going up again, and then maybe it would drop again, and they would buy and sell and buy and sell. And at the end of the year, it had gone from $200,000 to $900,000. That's still a great gain. They had a $700,000 gain, but it could have been a $1.5 million gain if they had simply bought and held it through and rode through the whole roller coaster ride. Now, that doesn't always happen, but usually it does. Usually when you invest in the stock market, usually when you invest in companies, usually when you invest in something that you believe in and you just hold it because you believe in it and you understand it, then it's going to do better than if you trade it. And not to mention, you're going to have all those feeds of trading it back and forth, okay? So use your investment in cryptocurrency also to diversify your portfolio. Don't put all your eggs in one basket. Don't throw it all into Bitcoin and other cryptocurrencies, okay? Especially if you are not very risk averse. For everybody's portfolio, cryptocurrency should be not more than just some small percentage of whatever it is that you're investing in. Invest in other stocks that you believe in. Invest in other commodities if you'd like to. Invest in any other investments and businesses and bonds and things that you understand and that you believe in, and just make this one part of your diverse portfolio. If you're getting close to retirement, you should be more conservative and risk averse. You should realize that if you're going to retire in just a couple years, you don't want to put a big chunk of your life's investments and savings into something as volatile and risky as cryptocurrency, because it could all be gone, or half of it could be gone next year, and then what are you going to retire on? If you're getting close to that retirement point, you should be shifting into very conservative, low risk investments that you understand. Talk to your investment advisor, your CPA, about rebalancing your portfolio and making sure that you are avoiding risky things if you are at that conservative stage in your life. If you've got decades before you retire, maybe you can afford to be a little bit more aggressive. Maybe, if you were to lose all of your money today, you've still got decades to gain it back again. So you can afford to invest a little bit more in cryptocurrencies. But once again, it should not be more than just some portion of your diversified portfolio. Finally, don't invest in cryptocurrency simply because you have FOMO, or a fear of missing out. Don't invest in anything because of that FOMO or because of the emotions of it, or just to do what everybody else is doing. And certainly don't buy and sell based on emotions. You should have a solid plan that you make with your investment advisor or CPA that considers exactly how to diversify your portfolio correctly, how to balance your portfolio for your risk tolerance level, and how to again, buy at the right times when stocks and cryptocurrencies have dropped, and then hold for the long term. And you stick to your plan no matter what emotionally happens out there. And that is the best way to grow your investments. Don't do it out of emotions. All right. Thanks so much for watching this video about is it time to invest in cryptocurrency. I hope that this discussion has helped you decide whether it's right for you and answered some of your questions. If you have more questions, put them in the comments below. If you want to see me make videos about other financial points or other things about taxes, please tell me in the comments. Thank you so much for watching. Please share this video with your friends and your family. Like it and subscribe. I'm so grateful for you for watching this video. Have a great day.